What's going on, everyone? My name is Nicholas Merton from Datadash, and today I'm honored to be sitting with a good friend of mine, Alex Saunders from Nuggets News, one of the largest YouTube channels in cryptocurrencies, and one of my really good friends in Australia. Actually, I think he was the first individual I actually got to meet in the YouTube community as I was doing some travels back in February of 2018 during the madness, and we've had some conversations as well after that over time talking about macro topics, crypto. So, Alex, thank you for making the time, man. I know we're on different ends of the world, but it's great to always talk with you, man.
Yeah, thanks for having me on, Nick. And there's been so much happening in the macro world, which I know you love to cover, and there's a lot happening in Australia as well. So I'm sure we're going to dive into some interesting topics today.
Oh, absolutely, man. I think that one of the things I really like when we get to talk, and as we talked about last time, we do really dive into the bigger picture. And on, I think both of our channels, we've been really trying to press that importance of understanding what's going on around cryptocurrencies, not just in the crypto ecosystem, because most of the kind of big catalysts we're expecting from Backed to hopefully a Bitcoin ETF, kind of these financial entries in the sense of the market scaling over time, they'll come as we have the macro environment setting the demand for it. So I definitely want to start off by asking you, man, what are some of the really big things that are catching your eye right now? I know you and I have talked a lot about what's going on in the macro picture, but what are some of the kind of big, scary things that you're looking for right now to really keep an eye on?
Yeah, well, I guess I got into Bitcoin back in 2012, and it was from a bit of the gold bug, silver bug sort of angle. And a lot of what's happening now are that, the most bullish catalyst that you couldn't have dreamt of back then. So things like negative interest rates. Just this morning, Donald Trump is tweeting that the Fed need to have the rate, 100 basis points lower. This is really crazy stuff that are making people wake up to Bitcoin, also gold and silver, which I'm sure we'll get into. But it's interesting just to watch Bitcoin do its thing and regain dominance. A lot of people are saying that Bitcoin's not, progressing fast enough. And there's all these different theories about what Bitcoin is, if it should be a payment network or a store of value. And I think it's different things to different people. But yeah, really interesting to watch us come out of that bear market, and what lays ahead in the next 12 or 24 months, I think is really exciting.
Yeah, to build on that, man, I had a lot of people who were leaving comments. I know it probably wasn't only on my channel, it's probably in a lot of different areas. I saw it on crypto Twitter as well, where people were kind of disappointed with the continued kind of tension in the trade war and the worries about, for example, the inversion of the yield curve. We didn't see a spike in Bitcoin over these past few weeks. We've been seeing, again, the tailored kind of sideways price action that we've seen. And I honestly think, we're kind of not focusing on the bigger perspective here. Bitcoin's the best performing asset this year. We've had one of the fastest recoveries, not to mention in a market that's much larger than the previous cycles. So I think you're very right on that in that sense, in the sense of kind of taking the perspective. Crypto has been nailing it. It's the best performing asset class. And when we're talking about negative interest rates, I think some people don't really understand what this means, but also why it's so significant and why it's such an interesting monetary experiment that we've never seen before in the financial sector. So, would you maybe want to dive a little bit into kind of what you've learned? I know you've done a lot of interesting interviews over the last few months around these topics.
Yeah, I think it reaches a tipping point where the average person, there was a recent survey that 86% of people, don't know what their mortgage interest rate is. So they just know that it's low. Or if you've got a savings account, you know that you're not getting much of a return over that year if you keep money in a bank. But when we hit that negative interest rate tipping point, it gets people talking. And now in Australia, we've got the war on cash heating up. They want to bring in this new law so you won't be able to pay for things over $10,000. And then I'm sure it'll come down to $5,000 and $1,000. And in the future, if we go into a recession and rates go negative, a lot of people will say, well, I'll go into a bank and get money out, and then you won't be able to. Now, whether or not they're going to crack down on gold and silver and crypto as well remains to be seen. But I just think negative interest rates is a tipping point for the retail investor and just the average person to go down the rabbit hole and ask all those questions that we did about banking and finance and how money works. And then people will be telling them, well, Bitcoin is this new option, as well as gold, that yes, it doesn't pay an interest rate, but it also doesn't take money off you just for holding it. So on top of that, we see the bond market going negative, and the amount of negative yielding bonds is 17 trillion today. And I read an article that 94% of the positive yielding high grade bonds are now in America. So that's leading to this really strong US dollar, and that's punishing all these other emerging market and even Europe and everyone else even more so. So I kind of get where Donald Trump is coming from. I don't want to make this a political video, but it is really funny for the Fed to have rates above 2%, where everyone else is at zero and talking about the next round of stimulus, and yet Jay Powell seems to have done this big 180 from talking about maybe 3% in the future,
Right.
but now he's kind of been stubborn and saying, well, we're only going to do one cut. This was a mid-cycle adjustment. So I'd love to get your thoughts on what's going on in the US and with the Fed.
And I'm glad you brought it up. I think this is a perfect first topic to talk about because I still see a lot of people who are starting to kind of get into the macro perspective of what's going on right now, who don't realize this. A lot of people, I think, in alternative finance, they kind of, bash on the dollar as the world reserve currency, the petro dollar, all those kinds of things, starting to become a weaker, kind of world reserve currency. But if you look at the macro picture right now, in the sense of the yields on government treasuries, if you look at the strength of the dollar through the Dixie or the DXY index, I mean, you can see, I think, as Raul Paul and a lot of people, Ray Dalio, I think a few others have been talking about, is this eventual squeeze that's going to come on globally for dollar liquidity. You have, for example, most bonds, as you said, going into negative yielding territory. So there's going to be a huge pressure in this case for not only the US dollar, but also US treasuries. And this is going to give the Fed, I think, a lot of room, and the federal government as well, to continue printing more money, to increase deficit spending. And I know I was reading on Reddit, someone left a really interesting comment. This is going to give, I think, the Trump administration, the current government right now, the room to make $1 trillion, infrastructure package in the United States, something that's been overdue. If there was a time to do it, it's right now. In this case, it's the time right now, because there's so much money across the world, governments who want to get that exposure to a treasury that's going to yield them something. Same goes for retirement portfolios across the world as well.
It's very similar in Australia, where our government, we've had, 7 prime ministers in 8 years or something like that, which must look crazy from the outside looking in. But they're obsessed with getting a surplus. And because we're such a resource-driven economy and iron ore is really high, well, it was a month ago, they're getting very close to a surplus, which, the US is running $1 trillion deficit every year. So because our government is so close to running a surplus, they don't want to spend big at a time when Australia and the housing bubble looks like it's popped and China is slowing down. So it's a different situation again here in Australia. But I wanted to talk more about the US, because I think something that a lot of people, the mistake that I know I made, is to think that the stock market's going to crash next year when you find out about all this stuff for the first time. And there's YouTube channels that are telling you that silver's going to go to $600, and I've been saying the same thing every year for 10 years. And I think a lot of people just don't realize about how, all these different mechanisms work and how much money there is out there and what is actually going on in the US. Because if I can get 0% or negative 1% in Europe, but yet I can get 2% in the US, money is going to flow there, and your stock market is ticking along okay. Now, even if it's driven by things like buybacks and, fudging of the numbers, that's all true. And I think long term, the US with 20 trillion debt and all these unfunded liabilities, I certainly agree with a lot of the conspiracy theorists, what they say, that the US is in a lot of trouble. But in the immediate short term, why would you send money anywhere else if the US economy is ticking along okay and you can get 2% on a government bond or in a bank where everywhere else is going negative?
You're absolutely right, Alex. That's the thing that I press again. I have that same kind of long-term thesis that there will be some kind of reset. How that's going to look is going to be really interesting. But eventually, at least for right now, we are going to see, I think, a dollar squeeze in this case, because there's a lot of dollar-denominated debt. There's a lot of things that set pressure for the dollar already. And as you mentioned, and as we're talking about, going into this period of U.S. stocks and the longest economic expansion we've ever seen, there's a lot of reasons for that. I think back in the turn of 2015, 2016, I remember the August 5th, I think it was, what day was it? It was in August of 2015. We had a flash crash, and I was worried that we were about to enter a recession. There was worries in China and everything, kind of global slowdown in commodities. But it turned out that U.S. markets kept climbing higher because we had, for example, the tax cuts, deregulation in the United States. And this gave a huge global advantage for the United States and for a lot of dollar liquidity to come back when there was the repatriation window in the tax bill as well. So it's all about, dollars shifting. That's the thing that I always try to tell people. I got this from an individual, Dr. Chris Katcher, who's an individual I met in Estonia, and he brought up a really good point, and that was that a lot of the rounds of QE in Europe and all kinds of regions of the world, they flock to U.S. markets, and a lot of people don't think about that. They think it would stimulate European markets in the countries where those central banks print the money. But liquidity can flow. There's Forex markets where dollars get shifted in different currencies, and you can go into pretty much any market you want. So that's the really interesting thing here, is that there's it's so much more complicated than I think many people put it out to be. But it's fun because it's complicated, I think.
Yeah, and I think that term liquidity is really important, and that also sort of leads into the conversation about stocks. And you mentioned the flash crash. I did a video the other day about all the algorithms, and I know you've covered it as well, about what percentage is just these bots bots and algorithms trading back and forward.
Mhm.
And that creates a false sense of liquidity, not only in the stock market, but in the bond market, when we've got the Fed and central banks buying up bonds. And what we're seeing now is everyone just rushed to buy bonds, even though they have negative yields, because they're thinking the government's going to buy it off me, or the Fed's going to buy it off me for a higher price. So it really is just this upside down world where it's all rosy and almost like a Ponzi scheme until it's not, until the same with the ETFs. As long as there's inflows into all these things and it's just a matter of who wants to buy it for a slightly higher price, as soon as that all changes and everyone runs for the exits, I just don't think there's going to be liquidity there, whether it's stocks and high frequency trading or the bond market. If the Fed says, well, hey, we're not going to do that again, we're going to try something else this time, modern monetary theory, maybe the governments try something different. I don't know, but I think everyone just has this assumption that they're just going to keep making money no matter what.
That's a great way to put the bond market, because I think a lot of people have looked at the number of negative yielding bonds, but they don't actually look at the prices of these bonds. And what we're seeing is this kind of accelerated rally on an already extended bond bull market. In this case, it's been going on for a multitude of decades. And what you get, as you were kind of alluding to, Alex, is this kind of Ponzi where you basically are seeing the values rise. It's usually that there's an inversion. It's usually when prices rise, the yield is dropping. And some people, for example, trade or hold bonds as they expect the yields to go down. And that's what you get. You get this kind of Ponzi where it's like the rates get more and more negative. And as you get trillions and trillions of dollars of wealth, in this case, in the bond market, a lot of it eventually will implode. You can't keep negative rates going on forever. And the only reason it's gone on, I think, as long as it has, is it's just like you mentioned with ETFs and fixed income markets. It's a select few people who are, again, either money managers in this case, or if it's a retail investor buying ETFs in this case, they're just basically continuously investing their paychecks, and they're not thinking about what kind of investments they're actually holding. But again, as you mentioned, it's a Ponzi mechanism in this case. So I love when people talk about that, about crypto. The ETF fixed income market has just been pushing this for a much longer period than it probably should have gone, in the sense of the rally.
Yeah, and tying that back to gold and liquidity, I think that's one of the big drivers at the moment. And I know everyone wants me to say that Bitcoin's going to go to the moon if there's a stock market crash, but I kind of see the scenario that in a crash, even gold and Bitcoin could be drawn down in that liquidity sort of crunch. I think the best scenario is a slow unwind with more people realizing what is going on and maybe shifting into Bitcoin. But I certainly see gold being that deeply liquid market for these trillions of dollars in bonds. We've already seen the gold market cap go from that 7 figure that people quote, 7 trillion, to over 8 trillion now because of the great run that gold has had recently. So when these sovereign wealth managers need to park a lot of money somewhere, it's going to be in gold. They can't put $5 trillion into Bitcoin. You can't buy that OTC or anywhere. So maybe long term, yes, Bitcoin is going to be a beneficiary of all these monetary games and politics, but that's why I'm still really bullish on gold as well.
I can agree with that, Alex. In the sense of the long term, I do see it being one of the, like, kind of next, I would say, our generation's kind of global hedge. But I believe unless we have an ETF or we have these kind of entry vehicles where there is that liquidity for institutional clients, this institutional wave isn't going to be as quick as many people expect. I think it'll come eventually, but I think what you're going to get is kind of the delayed response that gold and silver had back in the previous recession, where they're going to go towards where money can flow at the time. And I think, correct me if I'm wrong, if it was back in 2008, what people kind of really went into was treasuries as stocks were collapsing. And as interest rates went low, in this case, people started scooping up a ton of US treasuries in this case, because credit was pretty much free on the market and they kept buying up treasuries.
Yeah, I think we did a video, and I know you've covered this as well, the great website that shows the dynamic yield curve, where the yield curve inverts back in 2000 before the dot-com crash, and then back in '07, before the financial crisis. But then when we're in the actual crisis, those long-term bonds and the yields, and people start to, reshuffle back into stocks and other things. So it's about protecting your wealth before the crash with bonds, and then the smart money does what we talk about. When there's blood in the streets, people stepped in and bought those bank stocks and when everyone else is panicking, I guess.
Absolutely, yeah. You gotta be a few steps ahead of the curve in this case. And then I think, as well as you mentioned, in the sense of kind of looking at other hedges, this is why I tell people, as much as I have a large exposure, to be fair, in the sense of any asset class to crypto, I mean, I do definitely look towards gold and silver. I know my family and friends have been starting to look towards hedging assets as well. Outside of these kind of things we've talked about as well, I want to focus a little bit on crypto, Alex, and get your take on it. I think the crypto space, obviously price wise, has looked a lot more attractive to people, and looks like we might be setting up for the next cycle. But on a fundamental perspective, what's really catching your eye right now, in the sense of kind of up and coming, not just projects, but what kind of trends are you spotting in the crypto space that really excites you?
Yeah, I guess our message has been that I think Bitcoin needs to be the cornerstone of your portfolio, and then the platforms that are disrupting, Web 3.0 and trying to decentralize our data and replace the Googles and Facebooks and YouTubes, that kind of thing. So I believe that that's kind of where the majority of your portfolio needs to be, and then the low cap altcoins and those special projects that are trying to disrupt individual industries. I'm really passionate about a couple of dozen of those, but I still see the biggest mistake that people have half their portfolio in one altcoin that's number 300. And, we've seen it recently that one of my favorite projects, they didn't make it. Something happened out of their control. And there's a number of reasons why startups, even with a good team and with a great idea, that have a partnership and are producing revenue, and they still fail. So I've been saying that 99% of projects are going to fail, and a lot of people don't believe that. But I think now in crypto world, there's probably 10,000 projects out there. CoinMarketCap maybe lists 2 or 3,000 of them. I really do think in 5 years' time that there may only be sort of 100 that have really gained traction or done something, have a big user base. But what do you think about that?
No, I agree, man. I mean, when you're talking about 10,000, I was just thinking, I know Michael from Box Money just put out a video talking about this huge Chinese Ponzi scheme that went on. It was supposedly billions of dollars worth of Bitcoin. I mean, sorry, if not hundreds of millions in this case. I mean, it's just a huge Ponzi. And, you think about it, there's so many projects that you don't even see on CoinMarketCap, but for even the 2 to 3,000 in that case, and if you even get to the top few hundred, I think the issue is that people are way too overexposed into altcoins at the moment.
Yeah.
I'd say it's not like the stock market right now, where you could, for example, own a basket of 100 companies and like an index have a nice weighted way to invest in the overall market. You're living in the dot-com era, and you're basically only having a plethora of tech stocks that are very volatile and very prone to failing. I completely agree. I think 98, 99% will easily fail in this case.
Yeah, having said that, I think the time to be, really heavy in protecting your portfolio with Bitcoin, and it's kind of like we talked about bonds with investors rotating from safety to more risk on. Now that a lot of the good projects are down 90% still, that's probably the time when it is better to be thinking about, well, what are the good projects that I'm pretty sure aren't going to fail in the next 12 to 24 months that are down 90+%, and maybe rotate more into them now. And I guess that's where you sometimes have to put your trader hat on a little bit. And it's not easy because the crypto market is volatile. But getting back to that argument about liquidity, I think we're already seeing that there's indexes out there, and we know Grayscale, for example, and these other funds, they're going to flow investors into the top 10, the large cap coins, for those people that want some crypto exposure or want more than Bitcoin. And yes, we've seen a lot of new money come into Bitcoin. That's why the dominance is rising. I'm sure when you talk to someone for the first time, if they want to get into crypto, they normally buy Bitcoin. They're not going to get money and chase 10 different altcoins for their first investment. So that's how this cycle has begun. We've seen it back in 2014 and 15 and then 2017. And I very much think we are going to have some sort of altcoin run. I don't like that word alt season, where it's not going to happen like 2017 again, where you could throw a dart at a board and everything was going up 10 or 100 fold. I think it's going to be a smarter type of investor that comes in and wants exposure to the best projects out there.
Yeah, we talked in our channel. I did a video. I remember in the last crypto bull run and back in 2017, every month we were doing a video on like kind of altcoins that looked exciting and projects. I decided this year, looking towards 2020, where I do believe by that time we're going to see some kind of reversal in market dominance. I talked about my top 10 projects, and I'm leaving it at that. I really don't believe, as you stated, man, it's going to be so different from the previous rally that there are going to be a few key players that really perform well. And I would akin it to kind of how there was the first initial wave of the altcoin cycle exiting out of the accumulation phase in the previous one. You had Litecoin with its listing on Coinbase kind of being seen as a silver to gold in the sense of Litecoin to Bitcoin.
Yeah.
And then you also have as well, you had Ethereum coming up, and obviously the spawn of the ICO bubble, but now it's continued to find its support through the DeFi movement. And then you also had as well XRP and a few other players that really kind of rose up. And I think you're going to have some of those disruptors. You mentioned competitors to some of the kind of archaic centralized systems of Google and some of the big tech companies. I'm really excited about Basic Attention Token, Chainlink in the sense of oracleizing data, a lot of things like that. But in the sense of it all, I still think that settlement layer technology, monetary transactions, store of value, and that's found in Bitcoin and Litecoin and a few select players. That's really going to be, as simple as it is, the best use case, I think, in this kind of hedge against the global economy.
Yeah, the financial system, we know how big those numbers are when we talk about the forex or derivatives, and that is Bitcoin's biggest opportunity to capture market share. But then the internet and rebuilding the way that we transfer information and value to each other, I think, is another great aspect. And I've been pretty bullish on Ethereum, but they've got big headwinds ahead as they move to proof of stake in ETH 2.0. And I think a lot of people, they learn about another project. So just to name a few, EOS, Cardano, Neo, there's great platforms out there, VeChain, the list goes on. But they sort of have those different trade-offs to get better, scalability or throughput, all those types of things. And a lot of people got really excited about that. But then sort of Libra came along, and then we might have another blockchain, and people soon realize that it's a scale. Decentralization isn't this yes or no thing. Now,
Absolutely.
if Libra have 50 or 100 corporate nodes, a lot of people are going to say, well, hey, these guys are the big guys with money and all the users already. I might try their blockchain. Now, I hope that doesn't happen. I'm really passionate about decentralization and giving people their power back with their data and whatnot. But it's really starting some fascinating conversations, I believe, and people are realizing the importance maybe of decentralization.
Yeah, I think that, again, you can have this, you do have the kind of scale between centralization and decentralization. There is no kind of one label you can slap on things. The thing about Libra, and I did a video a while back when Libra had kind of first came out. I did my analysis of the white paper, and I got to say, I will say this in a positive note to try to kind of cut out of my crypto bias. The first positive note I say is that I'm all for a push forward. I hope that, for example, Facebook can really push to have a nice regulatory framework here in the US and abroad. If they can help expand remittance markets and build better alternatives to Western Union and a lot of the archaic systems that can charge rates from 10 to 30%, I mean, absolutely, better system than the old system is fine with me. But at the same time, as you mentioned, labeling this as a blockchain or as a decentralized network, I think is completely wrong. It's not a cryptocurrency, specifically speaking.
Yeah.
A cryptocurrency by nature, if you think about it, it's not just because it's it's the fact that it does use cryptography in this case of public and private keys. And if there's some way where Facebook through its central server or a government through a central bank cryptocurrency can censor, freeze transactions or funds, can have some kind of backdoor to your private key to, take away control of your funds. That's not a cryptocurrency at the end of the day. And again, I know there's some trade-offs with crypto. People talk about criminal activity and things like that, but it's like that's always happened with dollars. Not to mention, I think there was I'm trying to think of the firm and stuff. I think they had one of the large U.S. departments working alongside chain analysis, and they found that it was like $800 are used for every $1 of crypto criminal related dollars.
Yeah, that doesn't surprise me. But I think recently we saw Monolith was another one of these card companies that's come out and partnered with Maker and Digex, so you can spend their stablecoin or a gold token. So if those fully decentralized projects, or more decentralized projects, I should say, if they really take off, I think that's kind of what we're fighting for, rather than Libra gaining traction. I think they are a big threat to central banks and governments, and again, starting the conversation with, well, what is money and value if they're going to have this new ultra basket of currencies? But a lot of interesting conversations to be had there. What do you think about Libra? Do you think it is going to succeed, or?
The one thing that you mentioned, Alex, is probably the thing that little to no one has talked about as a potential fear. As much as Libra's not decentralization, as much as its distribution of currencies that back up the Libra is seen as a good thing, you want to obviously be diversified. I worry about the same issue that we've been talking about at the intro of this video. If the value backing Libra in this case, unless Libra gets its own value, kind of like fiat currencies, which would be a really interesting topic of discussion. I think, if its value is based off a variety of fiat currency, a hard reset on a lot of these currencies, I think that's going to be a huge volatile factor in the means of stabilization for Libra. And I think that's still why we're going to need, Bitcoin and kind of cryptocurrencies like that. But I'd love to get your take on that. It's kind of an interesting question, I guess.
The other thing I haven't seen answered, and I did watch all those hours of Senate hearings and Congress hearings, and I did a little bit of a summary if people are interested, but why are these big corporates doing this. They're not doing it out of the goodness of their heart. And they say it's a non-for-profit, but then they talk about this second token and they're going to distribute dividends.
Oh, yeah.
So I just don't know why they're coming together and saying that this is going to be cheaper. But they can never be cheaper than Bitcoin or a fully decentralized project where there is no company or middleman that is trying to siphon profit off the top. So yes, we need to scale with Bitcoin and the Lightning Network, and maybe that's a conversation you want to get into. But I just don't think that any company or corporates that are running a blockchain can ever do it for cheaper than something that's peer-to-peer.
They'll never be able to provide the quality that Bitcoin has and the security, I think, in that case. It might be that right now, for example, as you mentioned, we might not be at full scale, and whether or not Lightning's the right solution and stuff, we're still trying to figure it out right now. But I think, what we've seen, for example, on Ethereum right now, in the sense of the DeFi movement, that's brought some of the biggest optimism to me right now. The kind of interest rates you can earn, the sheer fact that there's so many different types of stable coins, and that anyone in the world, if they just have a mobile wallet or, desktop client, they can now get access to any currency they want, and there's no permission required. I think that's the kind of nature of what crypto is about. And I feel Libra, its biggest barrier, and I talked about this in my Libra video, in the sense of my fears is that Libra is tied to Facebook. And right now, because it's not permissionless and it's not decentralized, and that pretty much every factor of it is centralized at the moment, regulators of any nation will be able to cut it off. So we've talked a lot about Venezuela, I think, in Argentina, where there's a lot of worries about a currency crisis. In the case of Venezuela, you're under the rule of Nicolas Maduro. And if Nicolas Maduro says tomorrow, hey, Facebook and consortium of companies behind Libra, we don't want your product here, they're going to shut it off in an instant, because there is a respect of companies in international law, at least from my assumption. I might be wrong on that. But, in the case of Bitcoin has no PR firm. It has no legal firm. It's simply just a decentralized currency in this case, and there's no permission required. I think that's going to be one of the biggest barricades, and it's going to kind of kill the use behind Libra in this case, which is why I think it's so important for it to be permissionless. If they get to that stage, I'll pat Facebook and the rest of the companies on the back. But until I see it happen, I'm not going to be using Libra personally.
Yeah, and those rewards that people can get that you just mentioned, as soon as those apps get friendlier to use, for people to earn some interest on what they're holding. And it's such a fine line for someone that's new to this. They read about a guaranteed return, 1% a day, and that's a scam. And then they read about something that's giving you 14% a year and paid out monthly with some of the DI rates you can get at the moment. And again, how is someone meant to know that that's not a scam? That's a genuine project that's lending it out to traders or whatnot on the back end, and you can earn interest. So I guess that's why I'm so passionate about education. I know you are too. And I think that these apps are going to get better and better for people to earn interest on maybe gold or Bitcoin or just stable coins.
Yeah, I think being able to show a lot of what these DeFi apps don't do is they don't show kind of like a visualization for those who are skeptical of like seeing it actually transact. And what's nice is that it's all on the blockchain in this case. So if you can show people the actual confirmed transaction, like you would a Bitcoin transaction, if I'm just sending Bitcoin to you or ETH to you, I think that's going to go a long way for skeptics comparative to, say, BitConnect, which was around and stuff as a lending platform, when in reality it was just a big Ponzi scheme.
Yeah.
So yeah, I'm very excited. I think, over time that people will warm up to it. There'll be a lot of people who've never heard about DeFi or crypto that are going to get into this space. And I'm really excited. I want to contribute as much as I can to that movement. Yeah, man, I think it's exciting times. I think outside of just pure price speculation, the space seems to be maturing and finding out what it's valuable for, in the sense of the use cases. I liked, as you mentioned, I think I focus a lot too much on the monetary use cases, disrupting the internet and these big conglomerates in the tech sector. I think there's a really good opportunity for it. Yeah.
I know I've noticed some people in Australia, now that we've had a bit of a housing downturn and some people saying that the bottom's in or whatnot, but now interest rates are being cut in Australia and we're not even in a recession. I know just that fact that people can't get savings, interest in the bank anymore. That started people asking these conversations. We're getting a lot of new subscribers saying, what's going on with the banks? There's a royal commission. And then just the other day, Westpac, that's one of the big four banks, actually beat the regulator. So they took them to court, the regulator, and the bank had already agreed to pay a fine for the way that they measure someone's ability to pay back their home loan. They use a standard measure and it didn't take into account people's actual expenses. And so the regulator took them to court and they'd already admit that they were in the wrong. And yet the judge ruled the other way, saying that, oh no, you don't have to measure what people's expenses are, because if someone eats Wagyu steak and fine wine, was their example, they'll cut back and start eating, cheaper food. So there's no point measuring what they expend on. And so that was really crazy that the banks actually beat the regulators in court the other day, even though the Royal Commission into the housing bubble showed that there was systemic fraud in the Australian banking sector.
Yeah, man, I actually got to meet a lot of interesting people. I was back in Australia, I think back in April, and I met a lot of people who, have obviously been property developers and worked in that space for a while. A lot of people actually, been in that space have now gotten into crypto. And man, it started to seem like the tone had changed. Like when I originally went there and the early part of 2018, there was just a huge tone change here in 2019. As obviously I think the general housing market across the world has slowed down. And, I'm curious, not only to get your take a little bit more on Australia in this case, I'd love to get a time frame, Alex. Like, when do you think we're really going to start seeing the pain settle? And are we seeing it right now? And then also, what's your take on the global housing market right now?
Yeah, so I don't want to be doom and gloom, because I'm really mindful, as I said just before, about these people that stand up and say that it's going to crash and the housing market's going to go down 70%. So in Western Australia, where the mining boom happened, a lot of suburbs are already down 30 or 40%, and they've been going down for 5 years now. Whereas Sydney and Melbourne are more down around 10%, 15%. 20% in some suburbs, but there are other areas that are still going sideways. I live down in Tasmania, and property hasn't really gone down at all yet. So I guess it's a bit like being a stock picker, and when the market goes up and it's a bull market, you can throw a dart at a board and everyone makes money. So yes, the smart housing investors might be able to pick the best house in the best street in a good suburb, and that's still going to make you money. But I think overall, when you look at the average wage to the price of a house, but historically it's somewhere between 3 and 6, and we got up towards 10 or 12. So people just can't afford these houses, and the government's solution is to give out bigger homeowner grants, to drop interest rates, to lower these measures by which we see if someone can afford to pay their mortgage. So it's really hard for me to watch that play out. We know that housing is unaffordable, but instead of letting it come back to affordable levels, they're kicking the can down the road and trying all these things, and it's just going to make it even more unaffordable for the next generation. So I think we're seeing something similar globally. I know in Europe it's pretty common to rent. In Australia, everyone is obsessed with having a mortgage and buying as much property as they can, and we get
Same here in the States.
We have negative gearing in Australia, so if you lose money on your investment, you get to take that off your taxable income, which is really just crazy. And it, I guess it pushes in favor those people that have big property portfolios. If you have 100 houses and they're all losing money, that reduces your taxable income that year. So Price is the genuine guy that wants to just buy a house out of the market. But I guess what's your take on the US housing market?
Yeah, I can definitely speak not only in the U.S., which I think is a prime candidate of the thing that I've been worried about, that I think has propped it up and again kept us from 2015 and 2016 from having a correction to continuation. I think the thing that really propped up U.S. markets, Canadian markets, and even Australian markets has been a lot of foreign money coming in. And again, it's this game of inflows and outflows between different countries. A lot of the money out of China coming in. We've seen, for example, in the major cities right now, I think general properties are still, new homes are still getting built. Older homes are having a hard time selling, but we've kind of stagnated. There's no growth in new, old existing home sales. And even in new home sales, we're on the top that we had back a few months ago. The major thing, though, is that the major cities have been really hit, from cities in California to the East Coast, such as Boston, New York City. A lot of the major up-and-coming cities in the U.S. have started to see a huge dent in prices. And I think the reason for that is because there's been huge restrictions on outflows of capital. There's been a big crackdown in China. I think as escalations with the trade war have started to build, and that's something I talked about, I think, as far back as 2018. I was like, this is one of the few key leverage points that China has in the trade war between the United States right now.
Oh, yeah.
And I think that's been one of the biggest kind of letdowns, even for European markets as well.
100%.
It's going to come of the real estate market, I think. Yeah. Oh, sorry, I think I cut out there, Alex. You want to just keep on?
I was just going to say, you're spot on. In Australia, the amount of Chinese investors has dropped something like 84%, which is just crazy, because they were the ones that were really propping up, particularly in Sydney. But I guess two things that I think I'd want to get through to your audience if we zoom out. One of the things I think is changing is the way that we work, and good internet and people being able to work from home and the gig economy, all that sort of thing. there's less of a need for someone to live in the middle of a city in a big high-rise apartment more and more going forward, I think. So that, again, it pushes people out to live in the suburbs. It reduces the premium on living in a city. The other thing I think is playing out, and this is the case for any market, how much does something cost to make versus what someone is paying for it? So we see iPhones, for example, they have a huge premium because of the brand and everything they've built around it. But that is starting to decline because in China they have these other generic brands, or they want to buy their own brand, and we're seeing low-cost smartphones penetrate all these markets. So I think that smartphone is a great example of something that's going to come down in price. Now, it's the same when you're building a home. A home might cost $300,000 to build. So why are people paying $600,000 for them? Well, it's because the banks will lend them that much, and that's how much people want to pay. So supply and demand comes into it a little bit, but I really think that's been grossly sort of overinflated, and it's going to come back to reality. People, if they can build for 300,000, maybe that home goes back to 350 or 400,000.
I think you put it perfect, Alex. It's the same problem with student loans in the United States because we've had government guaranteed loans for any major you want. It's pretty much guaranteed. And because of that, it's just been, again, I think this kind of Ponzi mechanism where it's like, oh, don't worry, we'll worry about these kind of, interest rates and the fact that people aren't paying them and you can't default to them later down the road. And it's become this huge debt bubble. And I think as you continue to feed credit, if you can just print money, lend it out to anyone in this case, and, again, it's just kind of standard in this case that it's given to pretty much anyone, like a home mortgage. I mean, you're just going to build another problem for the future.
I'd love to pick your brain about the student bubble because it's so different in the US compared to the rest of the world. So in Australia, I studied pharmacy and my degree costs about $30,000, I think, off the top of my head, which is only around 20,000 US dollars. But that same degree, I hear these stats that it costs, 100 grand to go to uni in America, to live there and to study pharmacy or medicine. I just hear these enormous numbers and I wonder, who's footing the bill for all this? Why has it got so expensive?
Yeah, you're absolutely right, man. I had no idea, man. That's incredible, 20,000 for a degree. Yeah, to put some perspective to it, again, I think it's one of my very libertarian viewpoints in this case is that, I mean, we see this in the healthcare sector as well in the United States. We've had a very kind of wishy-washy kind of mix of free market capitalism and then also the intervention of government. And it's created this really messy healthcare system that's just overtly complex to where it's worse than a free market or a socialized healthcare system. It's just very corrupted in this case. I would put it that way. And the same goes for the college system as well. I mean, there's not so much a focus on building a campus of free thought, innovative education, bringing down costs because everything's guaranteed. If the government will cover a loan for pretty much any major, the curriculum doesn't matter. The relevancy of that curriculum to getting a career doesn't matter. Actually getting a real solid education and making sure that investment, that debt you're taking on is going to be useful in the future. To so many people, it's not taught that way. It's taught that college is mandatory. And even if you don't know what you're going to study in or what you're passionate about or whether or not your major is going to actually give you a career, go anyways. Like, you need to do it, and it needs to be right out of high school. I think it's very different from the world, but it's been a huge, I think, business for a lot of people.
Yeah, and that's one of the reasons why I left pharmacy, because it did become a business. People hear about the corruption in the pharmaceutical industry, and the healthcare industry has become the sick care industry. So I could talk for hours about that, and we've actually got a doctor.
Oh, yeah.
We've got a doctor coming on soon to do a bit of a deep dive into all that. But I think the final point you made about having to go to uni, I guess that message is pretty similar all around the developed world, isn't it? Whereas you look at what we spoke about before, where people can outsource and we can hire an architect in Southeast Asia for $20 an hour rather than pay someone $50 an hour that lives in Australia. So I think that water level is going to meet somewhere in the middle. And people that are doing trades where you physically have to be there to wire a house as an electrician, I think those sort of things we're already seeing. If you're smart and you run your own little business, you can be just as profitable as someone that's gone to uni and got a degree.
Absolutely. I don't know if I had mentioned this to you, Alex. I dropped out of university back a few years ago, and I actually went into a program called Praxis. And it's not a trade school, but it's focused on, basically, it's an online course where you go about finding what kind of field you want to focus in. You do 3 months of preparation, then they pair you with a startup. And that's how, at the time, some people might remember on the channel, I was working out of Palo Alto for a little while. And then I went full time with the channel, but it's what helped me create my YouTube channel. It was a really interesting program, and what a change from college. I was going to a public university in my current home state, and there was around, I think it was like 3,000 or 5,000 people. in my class that were on a Facebook group. And if I were to ask them around, like, hey, does anyone know, the answer to X or something, I'd ask some kind of question. I would be lucky if I got one or two responses. But when I was in Praxis with 200 kids in the workplace group that I was in, that was hosted by Facebook, you had like any question that you might have, 3 to 5 people who would be willing to help you learn how to code, learn how to build a website, learn how to better market yourself. I mean, it was absolutely a 180 from what I was used to. And I think the same is going to go in this case. There's going to be a huge drive for trade schools, alternative education online that scales it and brings the cost down like every other industry that we've seen. I think it's kind of the next innovative industry that's going to be really disruptive.
Yeah, if you're really passionate about something, you can learn so much about it on the internet for free these days. I never studied economics even in high school or anything, but I've been reading about it every day for 10 years and Bitcoin and crypto every day for 7 years. So you can really, learn so much about a field these days. And even some of the comments we get in YouTube on our channels and people in the groups we have in our communities, there's just so many smart people out there having good conversations that you wouldn't get even in that specific industry. And a lot of the time it's the different perspective they bring to the table.
Yeah, I remember, we were talking. I keep mentioning Raul Paul and stuff. I think there was like his tweet feed that he did a while back. He's really good at using the kind of multi-tweet thread and everything, or the Twitter rant feature. I think, like things like that, I've seen people leave comments where it's like, this was more than I learned in my economics class in 4 years. I mean, it's absolutely stunning how the internet can scale not only just media and entertainment, but education. I just wish more people would utilize it in that case. But I think as we go into the future, when people look for cheaper alternatives, when the student debt crisis finally gets resolved in some regard, people are going to be kind of pushed into those cheaper alternatives. And it's an exciting time. I think there's so many awesome platforms out there that are starting to spawn up.
Yeah, the next thing I'd want to ask you was about social media's impact, because I know Occupy Wall Street happened in the US around that last banking crisis, and you must have been fairly young then, Nick, but do you think that's changed in the number of people that are aware? And if we have the next round of QE, or if people get told their savings account is going to have a negative interest rate on it, do you think we'd see yellow vests in the US and more people, or would we get pushed with the propaganda through Facebook ads to change our mind? Or how do you think that would play out in the US?
It's interesting you mentioned Occupy, because that was right at the time when I first got into politics, economics, and everything. I was watching, I think, and generationally, I was one of the few that really kind of observed what was going on at the time, my age group and stuff, in the sense of how important the financial system was to the United States. In the sense of the reaction, I would hope that people would get up off their butts and, speak up against the government and central banks. But I honestly think we're in a generation where, this isn't so much an insult, but it's just the reality that, we don't really lead to effective change. Occupy Wall Street, the issue with Occupy Wall Street was that it was so scattered. Some people, I watched a documentary on a channel called VPro, and this guy kind of spoke about the beauty of Occupy. There was no structure, and it was people coming together and talking about things. But the sad reality is that you don't get anything done when there's not a structured plan of action. And I think that was the problem with it. And I have no doubt we'll get protests, we'll get things like that, people complaining. But so many people at Occupy didn't understand why the banking system failed and why, yet again, we were going to lead into another bubble. So what I would say is the thing that's going to cure it is it's going to be better technology, and it's going to be better apps and interfaces that compete with the banking system. I'm kind of working on something like that right now. I'm seeing so many awesome DeFi projects, as we mentioned, doing that. But I think it's going to be better solutions coming, because in 2008, to be fair, we can criticize the banking sector all we want, but what better alternative did we have? Were we going to go to an economy where we swap gold and silver for goods and services? As much as we know the importance of sound money, it's hard to promote that to the rest of the world. You got to make something that scales, I think, that really works for people in their everyday lives.
Yeah, and tying everything we've spoken today sort of back together, I think that's the hardest problem that the Fed and governments are facing. That even if the Fed drop interest rates back to zero, maybe the stock market continues higher for another year or two, but they've already admitted that that leads to inequality and the average guy getting left behind. And now they do have the power of social media. Maybe the next Occupy would be more well organized. What did we see the other day? The number of people that were going to storm Area 51 or whatnot. So I just think that the social media has really changed what people can do and can speak up.
That's amazing, and that was a joke at the time. I think so many people don't know it pretty much stemmed out of a joking post. This guy, for example, he pretty much left it for a day or two, and he realized, "Oh my god, I created this huge storm." And, it's around this there was intentionally a joke and everything, but, no, you're right. I think it's changed the way we've communicated in a lot of good ways and a lot of bad ways as well. But yeah, there's a lot of things that are really interesting, I think, kind of turning into these next few years. I'm interested as well to see, as we're progressing in this case, you were talking about the Federal Reserve. I think that if we can get better solutions coming up in this next cycle, we can hopefully have a preparation to again alternate people into a better system. I think this will be kind of the catalyst for cryptocurrencies to come in. But again, I think there's a lot of things that could go right and go wrong. So we'll have to see how the whirlwind goes over the next few years.
We'll have to catch up every year and see how this plays out.
Absolutely, man. Well, Alex, I appreciate it, man. And if there's anything you want people to check out, I would love if you. I guess we can kind of leave our links down below for anything interesting. But I guess for either one of our viewers in this case, if you guys haven't checked either of our channels out, we recommend you subscribe to either of us and stuff. I think Alex and I, we see eye to eye on a lot of things, but we also get to cover interesting perspectives from the different corners of the world. And again, man, it's an absolute pleasure to be talking with you, and we'll definitely have to chat soon.
Yeah, thanks, man. It was an awesome chat. It was everything else that I'm hoping we'd get out of it today, so it's great. Thanks.
Awesome, man.